Welcome to TradeTheMBI.com. This is John. This report is for the 5th of June. Well, the 4th pretty much dipped back down a little bit and came back up for the later part of the day. Not a big shock. We're still in the same sell configuration, certainly, but that red line is like literally right along our zero line right here, holding up steady. We've had deep steel in the safety. Actually, it turned up a little bit, gave some support for the long side. But again, you can still see now we're seeing more cyan short adding, and the green dipping is bulls getting out of their position setup. So interestingly enough, you still have to expect a little bit of weakness within any pops that exist. So basically, we've kind of moved to more of an intraday setup. Now, we had been looking at this because we were talking about the potential for the daily MBI Opus. So let me put that one up there because it has relevance at this particular time. And as we can see right there, moving along, we had it in a separate version that I have on my other screen. It had closed out a little earlier on the peak move. This one has slightly different setups, and you can find the different configurations that I have for a couple of these on the website under the strategy sections. But we were talking about somewhere around 1929 as a finalized target. But what it'll do is the program actually will look at various configurations within it. And I have quite a few different range setups that I've established for them just to take gains at different particular points. And this allows for diversity in both time while still utilizing the same security. So we want to have baskets of this and that. It's not necessary if you're trading in multiple time frames and or with multiple conditions and stop values. Of course, it does take a little bit more capital to have that many different things going on, but just from a general prospect, we knew what we were looking at. From that daily, still about 4 extra points is all that we were really looking for to the top side on that last setup, another 50K, which we've been following for some time. Just continues to raise its stop points, now up to the 1916 and a quarter. If I can get that to highlight, I'll move it over. There it is. And you can see we had the trail off. Nice move lower. And then what we did was we created this little pivot right here, dipped below it slightly. At the same time, a little buy setup comes in. But now we've pretty much reached it. And that pivot point, if we can get the value on it, negative 515. And you can see we're at negative 542. So a slight rise of the red here would break us past that level and put us into a full buy setup within that. You've had support of it with the red moving into a new zone, which even in the sub configuration that we've generally been in here, we still expect these lows to keep getting revisited. But we've taken away any overbought. So anyone who thinks that because we're up here that we're overbought, get out of your head, because this clearly shows you no longer in that overbought. But we no longer also have steel in the safety zone, and now you have steel and cyan both above your red, white, and green. So a turn away here, and you could see both the steel and cyan rising and green, red, white falling, and you would expect to see a much more significant decline within that configuration. Might as well look at intraday before we move on to all the other stuff. Plop that chart up next. And here was the intraday setup. Which program is this one? Is this? Yeah, this is C. So we came through. White candles are depicting the upside pivots as they come through. And we started off piece of cake with that big separation here. And then things started to change as we moved past. We made a higher red pivot right there. Once we crossed above it right here, you had the confirm on the buy signal. It came in right over to this place. And then it just continued. We started making successively higher pivots, and you can see those in these readings of the magenta. And then we came up through, and then we just pretty much traded sideways with it. But, with steel down in the safety zone, as we started to see the decay, we weren't worried about too much of a decline within that. So all in all, pretty straightforward action. Surprisingly, for choppy Wednesday, it was definitely choppy, but choppy with low range. That's the thing we're getting, is just low range. Flipping over here to the NQ, and pretty much, it gives actually a clear indication of what we're seeing. So we had the clip back together, and now we're starting out the new day with the bigger spread and actually break out higher of the science. So that should generally create even more negative. You've had a nice rise of the steel here, which has been supporting price, but if you get the red rollover, which still hasn't happened because you can still see red is over white, and that's still plenty of bulls supporting that setup. But again, we'll point it out. We have our positive extreme right here, all the way down to 36.77. So as it climbs, it just increases what that potential return is going to be. And not hard to follow intraday setups to take advantage of those. YM, likewise, exceptionally more ugly with the YM. And if this red is about to break into that lower zone here, which at negative 743, not quite there. We'd need like negative 7.6, and it would start to roll over. Will be a higher pivot, so if a green comes above here, we could end up with an additional buy signal from that as well. We also are starting to see a higher pivot above the cyan down here on the extreme for the YM. That would actually be buy signal as well if it's able to hold up. Of course, it's way too early for that to even be thought about. So we can see the cascade lower here. It's going to be a little bit more time before we see a turnaround from TLT, but as it bases out, should produce a fairly decent signal on a return. Not there yet. USO, likewise, just trading across as it's easing all of the overbought that's been in there. This is nice. 1, 2, 3. It's got to get this deal above there one more, and you would get a new de facto buy with that. Be interesting to see if it gets overbought really quick. That's a pretty fast rise in the extreme histogram at this particular level, but it's just holding on at that particular point. I think this is sort of core to what we're kind of seeing on the market here. We're just basically hanging on because there's no impetus to do anything, and you're not going to short if there's really no reason to. And going long, well, today would be the day we would start to see that, because you have your capital inflows from your mutual funds and that they got from the first of the month, and this is typically when they would start applying those. Just from a standpoint, yesterday usually would have been the start of it, and usually goes all the way through the 6th. They start applying because they got to do something with that money. You can't. What are you going to buy? Put it in a money market or something like that. They've got to invest and put it to work because there's just no return out there. And if you're chasing yield, you're going to have to go somewhere, and it's not going to be gold, because look at that. That's ridiculous. You got no help in bonds. You got no help in gold. Equities are flat. That's usually a recipe in my mind for movement, because flat doesn't make anyone money. You got to move things to get money. So that's the whole thing. Rotation, motion. Here we have the euro. Continued its decline, even though we're seeing rising. Now we just broke above here on the new zone. At the same time, though, you get the cyan green starting to split lower again. That starts to go. You can see a new wave lower for the euro, which would bolster the dollar, which I would imagine will put some pressure on TLT as well. So that'll be interesting. No surprise with this. Continuing to watch that decay in the spread. This is not boding well for the material sector, which I think also really shows the potential problems for manufacturing and economic growth going down the road. So if some of those projections start to come through, and the rosy discussion of what GDP for the next quarter will be if it doesn't meet it, I think we could see some major corrections. Well, not too far out, as early as July. AIG continuing to do exactly what expected. This exactly the opposite split of what we've been seeing, where you see green breaking out to the upside over the cyan, and in fact now steel above it. Additional bullishness going into that. So been a slow creep following that EBM. Nice piece of cake. Let's put up our radar screen and we'll scroll through the NASDAQ, see what we're looking at as far as relative readings. Still a lot more sells in there than we've been seeing recently. It's always interesting to observe that when you see it in a broader context. Same thing here on the S&P. Some new 3 cells, and a lot of these buys have turned to new cells, and then have started to go into um, even bigger cells. So always worth noting when you start to see those transitions. And of course, some of that's normal, beginning a new month and the rotation into a new sector. Perfectly understandable as we look at the Dow. It's really just kind of a mess. And likewise with some of the higher flyers, they're all over the map. Bouncing around, and that's what we've been seeing. I mean, that's why the market's been pretty much flat. We're not getting a strong directional push any direction at all, other than just straight across. Which for some people is great because it means fewer headaches. It's when things are gyrating everywhere that people get scared, but that is where the bulk of trading money is made, when things move around. Even if they don't go anywhere in a day, you can see, even with, like we point out with the ES intraday, there's still plenty of movement to do things. So it just becomes a question now. This was one that I never gave any restriction on, because it was clearly been a buy, stayed a buy, no change in the buy, and I saw that dip right here as an opportunity to get long for Apple, and sure enough, it's been perfect. No complaints about that one at all. Amazon has been marginally ugly, and I think potentially could produce a little bit here. Slight green up, steel above, but it's kind of a de facto crossover. Still, you're not narrowing. The overall trend is still to the lower side, but you see this nice extreme histogram with the slight improvement. I wouldn't be surprised to see a nice little pop there. Go over to Baidu. Has still been ugly, and that chart has just is so clean from that DOC spread breakout there. It's just beautiful, and just continuing decline. Instead of getting oversold at this particular point, could have the potential for a turnaround there. We've talked about this one. As long as financials hold up, I have no issues with this market. And sure enough, nice. In fact, potentially going to produce a new buy. It's been creating higher red pivots, and the green crossing above there would be an additional new buy signal. That would bolster the market overall. So we'll be watching that. Last hurrah potentially for this. We had the nice DOC spread back over here. It was a good short, took some nice little intra-move gains on there. It's continued to break down, but the strength of the market has really helped keep Facebook up. It's still within a sell. We've dipped below the cyan here on the extreme, which would be looking for that to continue, but it was a nice turnaround despite the continued sell signal. If the green does move above it, the potential for a new buy to come in place. So always a tough one when they don't want to cooperate. Whereas Google, I mean, it performed the cross and did the nosedive perfectly to it. Had a little bit of steel support on the move, but still within a sell configuration on that, so no change there. Plopping over to Netflix, had a decent pop up off of what has just been a continuing buy. I mean, if we put the ABM on there, and you have to think about it with the safety zone. Been fun. PCLN, I talked about it being, you can go back, because I mean, we could see that there was potential ugliness developing with it, and sure enough, it started it, moved across, and then, like I said, once the breakdown below the red, below the white, it was going to start to carry some more strength to that decline. Sure enough, now it's retraced. Well, did this extreme first, we've done that extreme, you got one more to go. 1206. Always causes people grief because they can't see it on the simple chart, but that's okay. We can. Not worried about it. Tesla, yeah, still nothing there. I mean, you can play it intraday, but again, it's, the alerts have been fine with that, but it's still overall bearish. Interesting. Waiting to see if Twitter is going to come out of the doldrums off this. Right at it, we should have seen the spike above with the green. We've had the rising red, but the red is just about to break into the next zone. That may be enough to propel it and give it some of the juice to start shooting up, because it closed at minus 1349, just a break above. That usually gives you a little bit of oomph, enough to carry things through. See if it takes place. As always, though, continue to look for me on the private Twitter feed, StuckTwits, and for those with indicators, I'm on the Skype chat as well. Trade well.